Thank you for joining us on our QTV Business and Economy program. The Business and Economy program is intended to promote the ideals of a corporate Gambia identity in partnership with public and private sector players along with civil society organizations and the international community. In today's episode, we have two distinguished personalities, both from the banking sector. We have, in the persons of Mr. Olukolorede Adenowo, who is the Managing Director at Standard Chartered Bank. We also have Mr. Mamour Jagne, who is the Executive Secretary at the Gambia Bankers Association. By way of introduction, I would give a brief overview of Mr. Adenowo, who is fondly called KO. Mr. Adenowo is currently the Chief Executive Officer for Standard Chartered Bank, the Gambia with dual responsibility for Standard Chartered Bank businesses in Senegal. He has also been a non-executive director of SCB Sierra Leone from 2014 to date. He has a total of 30 years post-university experience in banking, finance, and consulting. He has served as Managing Director, Origination and Client Coverage for Standard Chartered Bank, West and Central Africa, Deputy Managing Director for Standard Chartered Bank, Cameroon, and Director of Wholesale Bank in Nigeria. He was appointed the first regional head of global corporates for Standard Chartered Bank Africa when he led the Africa multinational business. He was a founding staff of SCB Nigeria and has held other positions at the bank. And he has held positions for over 19 years. He has worked in Societe Generale, Bank Nigeria, and Deloitte Nigeria, where he qualified as a chartered accountant in 1990. An economist turned chartered accountant, he was appointed Fellow of the Institute of Chartered Institute of Accountants in Nigeria in the year 2000. He is an alumnus of INSEAD and SED Business School of Oxford University, where he had management training in leadership and holds an MBA from the Lagos Business School. He is married to Olajumoke and both have 2 children. Mr. Mamour Jagne is currently the Executive Secretary of the Gambia Bankers Association. Mr. Jagne holds 2 master's degrees in International Relations and Development Administration from the Universities of Madrid, Spain, and Wisconsin-Madison, respectively, and an MSc in Economics. Mr. Jagne's work experience includes Regional Commissioner in all of the regions of the Gambia. He has served as Permanent Secretary at the Ministry of Finance and Economic Affairs, Ministry of Trade, Industry and Employment. He has served as Governor, Central Bank of the Gambia, and Executive Director of the Islamic Development Bank, and is the founder and first Managing Director of Ajib Bank. He has equally served the Senegambia Confederation and was the Permanent Secretary of Finance of the Confederation. Gentlemen, welcome to the both of you to the Business and Economy program. It is our pleasure to have you in our midst, and thank you for accepting our invitation.
Thank you, Major. Thank you for having me.
And let's get started. We cannot talk about the existence of a business environment in this country without reference to the banks, especially considering the roles that banks play in terms of financial intermediation, facilitation of international payments, facilitation of trade, instilling confidence in the global trading system through your various guarantee schemes, brokering transactions between unfamiliar parties. Me wanting to trade with a China business in Singapore, for example, I don't know the party, but I come through you, and through that you're able to arrange and facilitate that trade. But despite all these positives you help, there is that gamut of critics out there who still say, in our environment in the Gambia, that the real impact of commercial banking in the Gambia is yet to be felt, and a whole lot of improvement is needed. I'm going to turn to you, Mr. Jagne, to ask the question, What is your take on those critics in terms of the real impact of commercial banking yet to be felt? Do you agree? Do you not agree? And if you agree, why do you agree? If you do not agree, why is it that you do not agree?
Thank you very much, Mr. Roberts, Honorable Roberts, and thank you for inviting me to this important gathering. I think it's an important forum, and I want to thank QTV and its management for this initiative. I think this is the type of dialogue we need in the Gambia, so that we know what is going on, and we know what are the opportunities available, both in the public and private sector. I would like to start by saying that many times I have heard people say the problem of the economy is access to finance. I have heard that many, many times in different meetings. But please allow me to do a little bit of history before I go into the perspective. Access to financing is not a stand-alone. It is related to many variables. And all the governments from independence to date have tried to see how they can avail financing to the private sector or to the needed sectors of the economy. Going back a little in history, we had in this country, the government tried to open up the financing, the farming activities of this country by providing subsistence credit to farmers. There was also the production credit. But what was the problem? As I said, financing is never a stand-alone. In an economy or in an activity where the operator operates for only 4 or 5 months of the year, he is bound to be poor. And that has been the problem of financing. The government tried to mechanize the process from the hoe to other forms of crop production by introducing plows, etc. But you cannot do that for 3 or 4 months of the year, and you cannot be poor. So the pumping of funds there did not work, even though fertilizer was provided, improved seed, etc. Now, let's go on. Still around the same time, we had the government giving guaranteed loans to private businesses. And it gave a lot. I know something about it because I was then in the Ministry of Finance. And what was the end of those loans? Number one, we had the cooperative union with a lot of bad debts. And we had the government guaranteed loans turning sour, and ended up in the Gambia Commercial and Development Bank running into serious difficulties. And I was in finance during the Economic Recovery Program. We had to sanitize the bank and then take out the non-performing loans and created the AMRC. So the problem of access to finance has always been a business of the government. But what we must realize is that there is one important element that is more important than access to finance, and that is the human dimension. We have to have the people who have the knowledge, the experience, the qualification, and the attitude to work and do business that would make access to finance meaningful. In the absence of that, you give me $100,000. I don't go to my shop, or every ngente I want to go, every ditch I want to go. What happens? So I think access to finance should be looked at in total. Now, in the present dispensation, when we have 12 banks, banks were interested in doing business and lending. Now, number one, banks, if you look at the balance sheet of banks at the time, the main source of income used to be treasury bills, foreign exchange trading, and trade finance. Why not lending? Because of the fear of lending and the risk. And the fact that if you hold people's funds, you have to put it in safe deposits, or safe, you have to lend it into safe hands. Now, when we had 12 banks at a very short period of time, it was necessary for us to do two things. Number one, you have to, the rate at which those banks were increasing is not commensurate with the rate at which we are generating qualified people to run the banks in the different services. Therefore, the Bankers Association came up with a solution to that problem, the Institute of Bankers and the monthly training program, etc., etc. Then it led to, what do we have now? We have about 1,800 people directly employed by banks. Okay, in terms of branches, we have about 89 branches all over, excluding the head offices. Now, but with all that infrastructure and the ATMs, you need customers. Gambians did not understand at the time what was banking, what benefit banks can give you. I'm not talking about the elite, I'm talking about the majority, the bulk of the population. You take a bank to Farafenye, the farmer is there, he has his money under his pillow. He might not know what the benefit of putting it in the bank. So there was a lot of unbanked funds that had to be brought in. But at the same time, in order to educate the Gambians as to what is a bank, what is a saving account, what is a current account, what is a checkbook, how banks operate, how banks collect funds from those who have excess liquidity and give it to those who need the liquidity to do their business or other things. We had to educate the public. So we went ahead and created what is called the Bankers Hour. Every Saturday from 12 to 1 o'clock, we have the Bankers Hour.
In English or in the other local languages?
In all languages.
Okay.
Except Sarahule, I think, and Fula, I don't, you hardly hear that, but English, Wolof, and Mandinka, every time. In fact, when we do it in one language, we try to repeat it in another language so that the general population is educated. Okay. And the whole idea, am I going to?
Yeah, well, yes. Well, let me allow MD to jump in. But here, I'm going to twist the question in a little bit. Standard Chartered Bank has been or is still the leading bank in the Gambia in terms of asset size. And it used to be also the leader in terms of market share and profitability. But over the years, we have seen that leadership role in market share and profitability being eroded. Primarily, I could say that the entry or entrance of the other Nigerian banks into the economy has played a role in that regard. And I know that there's been some policy changes at the bank in relation to some of the unfortunate incidents of fraudulent mishaps here and there that had caused the bank to take a more precautionary role. Now, in your capacity as the managing director, do you foresee anytime soon a change from the perspective of the bank where it would begin to lend more, both to the wholesale and to the retail market? Because what I gathered, from the general public is that because of the fact that the bank is not lending or was not lending, I don't know whether the bank is lending now. I believe they have started lending, but in a very measured way. Do you foresee going back to the days where you were lending, and hopefully that would bring about a reversal?
Thank you very much. And I echo the sentiments of the Executive Secretary in thanking yourself and the House of QTV, for this laudable program. Indeed, we are lending. We had challenges, like you rightly said, and restrictions on retail lending. But that change has come. We're bringing in new product solutions, and indeed we have started rolling that out this year. I would like to say that, Standard Chartered Bank is 124 years old in this country. It's part of the history of the Gambia. It's a household name here. With 5 branches spread across the Gambia, 1 in the URR, 4 in the Greater Banjul region, and 10 ATMs. We service the whole of the Gambia. And we will not deviate from our core focus, which is to provide exceptional client experience, high level of corporate responsibility, social responsibility, as well as compliance, but at the end of the day, deliver the best experience for customers. Being 124 years old, being the first bank, being a leader in the industry, provides its own challenges. And therefore, with the influx of other banks into this market, what they would go for is market share. And the bank that has the market share is Standard Chartered Bank. But I would like to say that we will continue to roll out new products, which we have started, new services. 2017 was a challenging year for all banks with the reduction in treasury bill rates. But a lot of banks, especially ourselves, have quickly brought in solutions which we are already rolling out to ensure that we deliver the products that the customers want, we delight the customers, but at the same time, we ensure that our community engagement, our corporate social responsibility is still out there, and we are known for that. Don't forget, our mantra is to be here for good. We're not fly by night. We will continue to have sustainable revenues and have a sustainable institution. What I will leave you with is just watch the space of 2018 and you will see a change. Thank you.
I have no doubt that you would usher in change, which we all aspire and hope for, because as a former employee of StanChart and knowing you, during my banking days and knowing your capability and what is it that you have done, I'm sure, I'm very optimistic that that change will come in terms of the banking space. And I am going to jump, because now that you've said it, I would just want to do a follow-up question in that regard. You come from Nigeria and you bring with you tangible, formidable experience. An economy where the banking sector is vibrant, an economy where the competition is stiff, an economy, yes, where the population is present compared to the Gambia, and therefore opportunities abound. How, and let me also talk about your experience in terms of the leadership role that you've exhibited in other West African countries, Cameroon, Senegal, Cote d'Ivoire, you name it. How are you going to bring those experiences to bear in our market, albeit the small market size?
Thank you. Market size is really not an issue. It's about continuing to bring those high level of products and services that we see in other large markets, into the Gambia. From this year, we are focusing on retail lending. We have all come together as a group, the wider bank now, and we have decided that we need to actually do more to support the government, in terms of its national development plan, because the Gambian people demand democratic dividend. They would see democratic dividend from infrastructure rollout, capital spend that would lead to sustainable revenues for the Gambian people. The government has put in place a national development plan, which is robust, which identifies the projects that would actually deliver those democratic dividends. And in that space, which is our sweet spot, the bank has done a lot across Africa, the Middle East, and Asia, and we're coming to do the same here. We're advising different aspects of government, our counterparties in the UK and other countries, are working very closely with the government, very, very closely in providing support, very closely in capacity building, and very, very closely, in providing funding solutions once the enabling environment is rolled out. And the government has started to roll that out. In terms of the retail space, we are rolling out more lending products. We call it employee banking throughout this year. And we are bringing the best-in-class digital offering. I don't want to let the cat out of the bag, but you would see a totally different institution by end of 2018, beginning of 2019, with the kind of electronic solutions and digital solutions that we have started to roll out. Finally, in terms of the look and feel of the institution, and for those who decide to walk into the branches, we're starting with 2 main branches, which will be world-class, what you would get anywhere in Asia or in Europe. So that at the end of the day, the infrastructure that the Gambian people want and they desire and they get out there, you would get here in Standard Chartered Bank. The infrastructure is there, and on top of that infrastructure, the products and the solutions will be rolled out. And indeed, we have rolled out. And so a lot of investment dollars are coming into Standard Chartered Bank Gambia in terms of training of the staff, in terms of enhancing our systems, in terms of rolling out these products on the back of those 2, so that towards the end of the year, you will see a totally different institution. And at the end of the day, the Gambian people and our clients will be better for it.
Thank you. Mr. Jan, I would come back to you and do a follow-up question regarding your first intervention. When I talked about the roles that banks play in the business environment and whether you agreed with that view that of critics that there is yet more that the banks need to do. You spoke about the fact that most people that you have come across have lamented the challenge or the issue of access to finance. And let me draw your attention to the Global Competitiveness Index of the World Bank. That provides a ranking, comparative ranking, if you will, of countries in the world in terms of their business environment and how competitive it is. Access to finance was actually ranked as the highest in terms of the parameters which present a challenge to the business environment. And I totally agree with you that there's a 2 perspective, to that view. Yes, as a borrower, I could lament the availability of credit or finance, but then on the other end, am I worthy to be extended credit or finance? And I applaud the initiative that the Bankers Association has taken, not only in terms of the institute that it has created to help bridge the gap in terms of capacity, but also the program on the radio. But perhaps with the institute, I think the program on the radio has been ongoing for some time now. Are you beginning to see progress in that regard? Are there changes that are happening? Are those 2 platforms sufficient to really help address the challenges confronting the bit regarding to access to finance?
Okay, I think the bit regarding to access to finance is being addressed in the radio program by educating the people on what is banking and what products bank can offer to the customers. Mm-hmm. You have made reference to the index. Is it the World Bank index?
Yeah, the Global Competitiveness Index.
Yes. Okay. Now, I think immediately after access to finance, mm-hmm. we have to put in the human element. The human element is critical. Mm-hmm. If I am unable to manage $100,000, if you give it to me, it will fail. Mm-hmm. Now, we have to come up with a means of improving on our human capital in this country. Mm-hmm. It is critical at the level of the bank's service delivery and at the level of the customers. So that when you are addressing this issue of access to capital, you are giving it to individuals who can manage it profitably for themselves and for the bank. I am not saying that it's not a problem. I am saying that it must not be looked at in isolation. The issue is, how do we address the human element so that the entrepreneur out there who wants to run a welding shop knows really what is a welding shop, what is capital, how to keep good books of account, how to record his profit and separate it from his capital. There is a lot of things that needs to be done on the ground so that capital can flow. We don't want a situation where capital flows and it doesn't come back. It's not good for the economy. So my take on this is, yes, it's a problem, I recognize, but it must be addressed in concert with the human element.
The banking industry in the Gambia has seen its players grow from under 5 in the late 90s, early 2000s to now, I believe, 12. Some of the new entrants have successfully plugged into the industry and even overcoming the old guards in terms of financial performance and market share. From my reckoning, their competitive edge or advantage has been to work on efficiency and also tailored customer service. As the executive secretary of the Bankers Association, do you believe that those two competitive edges, which they pretty much unrolled when they came in to gain market share, as MD of Standard Chartered Bank is saying, and therefore delivering efficient service and also custom tailor-made service, do you think they still maintain those two efficiency competitive parameters, or are those waning from what you see? I mean, as an ordinary man, because you're also in the private sector.
I think in the future, the banks have to look at 2 areas, or in fact 3. One is technology. It is very expensive to run a branch, and you cannot run a branch successfully or profitably in the rural areas. It's not easy. I can imagine the standby generators, the staff costs, etc., etc. So they have to use technology. And I have seen in other countries, the most advantageous technology is through the mobile. Now, if I am a market woman, I am buying or selling in Basse or Fatoto, and I want to pay or receive money at 7 p.m., the bank is closed. So how do I do it? Why not do the Kenyan experience and use technology, mobile? Number 1. Number 2, the banks also have to come up with new products. They have to be imaginative. Given the economic context in which they are operating, the population, the income per capita, the neighboring countries, the lack of serious industrialization in this country, what products do I come up in order to be able to have an advantage? But I want to also add my word to what he said about the Gambians desiring democratic dividends. I remember some time ago, we were launching the first syndication between 2 banks in this country. And what I said at that meeting was, for those who are asking why there are so many banks in this country, that signing ceremony answered the question. I think it is time that banks do syndication in order to finance major government projects. They have to look at it carefully. It has to be carefully structured. The necessary policy environment has to precede. We need to come up with medium and long-term financing instrument so that also the local banks can benefit from this. That is how I see the way forward.
Okay, thank you very much. You touched on a point that I would subsequently go into, and that is bank syndication, which I would subsequently touch into. But for now, let us proceed, and I would like to ask this question to Mr. Adeneo. In general and on average, and you did mention this in one of your interventions, the banking industry has managed an impressive degree of profitability, you know, amidst a tough business and economic environment. Can this profitability be sustained? If yes, you know, why are you optimistic that this profitability, I'm talking here industry-wide, and perhaps if you want to share your experience and, you know, I mean, why you believe that maybe from the perspective of your bank, that profitability can be sustained, because it's an issue of risk and reward. We know the higher the risk, the higher the chances of a reward. But then again, sometimes it's good to be cautionary, and as you said, here for good. To be here for good, there are certain fundamentals that you have to observe. But do you think the industry would be able to sustain its profitability? And if so, why are you optimistic?
Okay, let's put things, you know, in perspective. We shouldn't look at things in isolation. And so, in the last few years, you know that the private sector was crowded out, and that has changed. And so, with the crowding out of the private sector, the government was the most dominant player in the money markets, sucking out excessive liquidity. The government was the anchor for development and not the private sector. That has changed. And that also led to excessive borrowing from the system and increase in interest rates. The private players, the banks, were left with just investing about 70% of their liquidity in government securities, so as to continue to support the government. With the new regime, we're now focusing on robust growth that will have more benefits, you know, spread across and evenly, and private sector led. And therefore, with the reduced borrowing from the markets, with tenor elongation of the government securities from 90 days, 1 year, now we're looking at 3 years, 5 years. Banks now have the opportunity to fund the real sector. Now, in funding the real sector, in providing solutions to the real sector, the enabling environment has to be created. We're in that process. The government crowding out has to go. Government has done that. Other initiatives that the government has done was allowing a free float of the exchange rates, which was not the case before. And so you can see some stability between 46, 47, you know, a semblance of a market. Now, the compulsory sale of 15% of foreign currency in the old regime is no longer there. The central bank comes in, willing buyer, willing seller of foreign currency, and the rate is determined. You know, so with a more market-driven business environment, you expect more robust revenues going forward. You also expect that with the enabling environment for the private sector to thrive, there will be more and more opportunity, you know, within the private sector, you know, as against public sector, you know, such that private sector benefits would accrue. you would also realize that in implementing the National Development Plan and rolling out infrastructure, there has to be infrastructure spend, advisory, other forms of solutions for these projects, because most of them are going to be long-term projects. Syndications will come in, and at the end of the day, project finance, with all these solutions now having to come in, it's a must. You know, we're looking at sustainable revenues and a more sustainable banking industry, you know, going forward.
Thank you very much, MD, and for that, you know, sense of optimism. And I want to buy into those viewpoints. Now, the banks, given the changes and the new dispensation, are endeavoring to do their bit, as you rightly pointed out. In regards to the point that was made by Mr. Jain earlier in terms of the human element relating to the bit regarding access to finance. What do you reckon, Mr. Jain, in view of the goodwill of the banks under the new dispensation and the sense of optimism that MD has pinpointed, what do you reckon the private sector players now need to do to ensure that they can leverage, you know, the optimism that the MD has just pointed out here? And let me just elaborate a little bit. For one, treasury bill rates have crashed, meaning more liquidity is now available on the side of the banks to lend. The banks are now willing to lend more to the private sector. But for that lending to happen, there are certain criteria that any bank would look at, because as you rightly pointed out, security in lending, for me to give you X amount and ensure that those X amounts come back and at the same time your business flourishes. What do you reckon as a private sector player as well? 1 or 2 points that the private sector must begin to do so that when the banks are ready to lend, when the banks are beginning to syndicate, when the banks are beginning to look at opportunities vis-a-vis project finance, those funding would be made available to the private players who, for the most part, are saying access to finance is a challenge.
I am very much impressed by the fact that there are many young Gambians who are coming in the country and starting their own business. You know, when people were leaving the country and going abroad, we thought that it was a brain drain. But with this new dispensation, if they come back, it's going to be a brain gain. It's going to be a brain gain in the sense that if I go to anywhere outside the world, Europe, Asia, anywhere, and I work in an industry, I see the work ethics. I see how the company is structured. I see many things that I learn from. When I come to the Gambia, I establish my own company. I should be able to put that into practice. Absolutely. And that will help generate a core young entrepreneurs who are disciplined, who know what is a company, who knows how to run a company. And I think that is going to be our strength.
Absolutely.
So we have to encourage those young people who are out there struggling. They are coming up with different ideas in every sector. Some I have seen it on TV, some in farming, some in information technology, in trading, everything, even in processing our local products. Now, I think what needs to be done is, how do we engage these people and see what is their strength and what is their weaknesses? And we help them through education or consultancy firms or whatever to enable them to come up with good projects that can be financed by the bank. But good projects mean also that this company or this individual must have a good infrastructure in place. When I say infrastructure, I mean a company infrastructure.
That's right.
Registered, proper books of account, audited account, etc., etc. I think that is the way forward.
Effective administration?
Effective administration of a company to an international standard. We cannot say this is Gambia, I run my company as I like. A company is not an individual. You, even as the proprietor of the company, you should have a salary, and that is a cost of the company. You see, so it has to be done based on international best practice. If we are able to do that, then banks will be more willing to lend. Banks don't want to lend to an individual Mamour Diagne, because if I die, what happens?
You die with the business.
That's right. and in fact, we have seen in the past that because businesses were very personal, when the individual goes, the company goes. But you look at other countries, Ford Motor Company is here, Toyota is here, etc., etc. Now, we should also try and get that culture in the country, so that if you have X company, no matter whether or not the initiator or the creator or whatever is in the business or out of the business, the company must run as an independent entity and operate professionally using international best practice. If we do that, I think banks will be more willing to lend.
It's an excellent point you made, and it draws my attention to the second episode on this program, where a gentleman in the name of Mr. Abdoulaye Toure, fondly called Bax Toure, said, in the Gambia, most businesses are owned by 3 shareholders: me, myself, and I. So what you're saying is we need to rid ourselves of that dispensation, because incorporatizing a business provides an opportunity in itself, because you are not the sole owner, and therefore it minimizes the risks of demise or incapacitation. And this, I think, should be a lesson that we should take cue from regarding what could happen, what should happen if banks are to lend more to the business people. But let me switch gears a little bit and talk on macroeconomic issues, key macroeconomic issues. And here I want to dwell on the points of predictability of the policy tools of the central bank. I know you touched briefly on it when you spoke about the business space, as it were, under the new dispensation, where government used to crowd out the private sector because of, number one, the borrowing that obtained at the time. We've seen treasury bill rates crash, and I must say, as a former banker, I was happy that that happened. But then again, the question becomes, it was not expected. It was the least expected, even though there has been some degree of mooting here and there that was likely. And rightly so, because of the positions of the IMF and the World Bank, and having to deal with the degree of government borrowing that had obtained in the past, which actually was making it very difficult for the country to move business-wise. But should that be a concern going forward? Should central bank, and I know you are the executive secretary of the Bankers Association, what is it that we need to do, perhaps at the level of the central bank or at the level of the Bankers Association, to help in the predictability of the business environment? Because this is key. Where, for example, we would know that when treasury bill rates change, maybe they'll change by some 25 to 50 basis points, instead of changing by 1,000 basis points, which is about 10 percentage points, which is what obtained when treasury bill rates crashed from 1920 to now, I think 9%, for the 1-year T-bill. What's your take on that? And do you reckon, as a executive secretary, that the predictability of the business environment vis-a-vis key macroeconomic parameters is key? Interest rates, foreign exchange rates?
Yeah, I think, number one, I wouldn't like to use the word crash, because whenever there is a crash, it's an unpleasant experience. But as a customer of the banks, I would say it landed, and I was happy that it landed as a consumer. Now, I think price stability is key, and that is one of the roles of the central bank. Price stability makes business predictable and makes it easier for the business people to plan their activities. The fact that the treasury bill has gone down I think it is very healthy. Maybe people have been querying about the rate at which it went down. But I think it was necessary. And I have no problems with that. Because really, it was leading to non-lending or people borrowing, knowing that they are going to default. And that is not good for the economy. What is necessary is let the central bank play its role as a price stabilizer. If they stabilize the prices of the basics under their purview, I think it will make business environment predictable. We will have a steady and steady flow of information. You can predict and plan your business, and I think that is very positive.
Okay. You mentioned that it was a pleasant surprise to you as a businessman when the interest rates came down, the treasury bill rates. And here I would want to link that reduction in the interest rates, and I would not use the word crash. That when the rates drop, largely because of the policy rate of the central bank dropping. But we have not seen a commensurate decline, if you will, in bank lending rates. And I pretty much have an idea in terms of why that may be the case. Because when banks lend, they make an assessment of various parameters to see at what rate they should lend. But one would have thought that whilst that the degree of risk may not have changed much in terms of whether private businesses are keeping accounts, ordinary accounts, or whether those accounts are being audited, where private businesses may continue to be dominated by single owners instead of those businesses being corporatized, among a host of other issues, as well. We have not seen the lending rates at the banks, change. I can give you an example. SMEs lending, they are lending at around 19%. Retail is lending around 21%. Corporates anywhere from 15, to 20%. So why haven't we seen a commensurate decline, if you will, that pretty much tracks the monetary policy rate of the central bank when those rates came down? Or do you think it's a gradual process and will eventually get there?
Okay, a few things. I will echo the sentiment of the executive secretary in terms of the central bank achieving a balance, and they've done a great job, in terms of predictability. Today you can predict exchange rates, inflation is going down, interest rates is going down. I think it was important that the central bank takes that quick stand, when the new central bank management came. And so, yes, not a crash, but bring that element of reasonableness in the different parameters that would enable, the different macroeconomic parameters that will enable the company grow or the country grow. And so there is more predictability today. And you talk to the average business person, he's glad he can predict his exchange rate, he can predict his interest rates. Inflation is manageable, has gone into single digits. Having said that, on the interest rates, to be fair to the financial sector, you're talking about from high 20s, we're down to, depending on which level of risk in the risk spectrum the institution falls into, you're talking about between 15 and 18%. And the MRR came down from 23 to 20 and from 20 to 15. Albeit sudden, but welcome. And so Standard Chartered Bank adjusted, commensurately with that. And so you're seeing rates within that band. Now, one of the things we also need to take into consideration is timing and the gestation period for the adjustments. Because again, don't forget, depositors are not happy. Those with surplus funds are not happy because they have seen their yields go from 20% down to 6, 7, 8, 9, 10. You know, some of them, their means of livelihood was those interest rates. The function of a bank is to bring the surplus units, you know, and intermediate for the deficit units. So, having said that, those that also had long-term contracts, you would have to wait for those contracts to mature, and at the same time strike that balance as you bring down your deposit rates to reflect the money, the MRR. Thirdly, and again, we should look at things in perspective and totally. The average individual borrower on this kind of facilities we're talking about elsewhere in other countries is charged double digits. But the low risk large multinational corporations are those ones who are mirroring your 3, 4, 5, 6, 7%. You know, so it depends on where the institution falls in the risk spectrum to get benefits, you know, from low risk or risk free, which is government, you know, to high risk. But indeed, the banks have actually adjusted and reflected, you know, the fall in those rates, again with those different constraints and restrictions.
Gentlemen,
if I may comment on that.
Okay.
I think this is also one of the advantages of having many banks. I can see that in the future, the competition between the banks will also force the rate down.
That's correct.
So the competitive, the element of competition should not be underrated.
That's correct.
There are 12 banks, they are competing for customers, for good projects. If I have a good project, I'll shop.
Absolutely.
I'll go around and say, I have this project, how much would you charge me? And over a period of time, it cannot be at a short period of time, for the reasons that the MD has advanced. Okay. Over a period of time, the rates will go down.
Absolutely.
This would perhaps be the last point that we would discuss on today's program. Do you believe, and this goes to both of you, considering the lending risks inherent in our economy and in efforts to boost the productive sectors of agriculture and manufacturing, especially when it comes to value addition, notwithstanding the challenges within those sectors, that the day would come when commercial banks operating in this country, if the day is already not here, as per some of your points that you have made, that a day would come when banks would pool resources together, when banks would be more innovative, as you had said, that this is one of the things that banks need to look into, given the competitiveness environment. But pool resources together in efforts to lend to the productive sectors. And here, let me just give an example. We know that the agricultural sector in all African countries, especially in the Gambia, has been tipped as a sector that could help bring about a difference. We see the position of the president of the African Development Bank, believing in agriculture and saying this is a sector that we have to look into. So if the banks pool their resources together, and they on-lend from those pool resources, naturally the risks inherent if a bank had gone it alone would be minimized. So do we see ourselves, do we see that happening in the future, in the near future?
You know, I would say that, you know, as a bank, as a Standard Chartered bank, the areas of growth that we see, which you rightly highlighted, tourism, agriculture, import, re-export, as well as infrastructure, again, to support the government's growth plan. And those are areas where we have complete expertise, which exist elsewhere within the group. And I would say, if you look at the past, there's hardly any business in this country that has grown that would not say, Standard Bank then helped me.
True.
So we're looking at an interregnum of 22 years. So we take that, you know, in perspective. We're talking about 22 years where the government crowded out, you know, the private sector. But before that, we were actually, as banks, supporting those sectors. And we will continue to support those sectors going forward.
Thank you. Mr. Jan, you'll have the last word on that point.
Yes, I think that's a very important point, and I think that's the way forward. I would like to encourage banks to critically look at, first of all, the economic base of the Gambia, and realize that our comparative advantage in the short run could be irrigated agriculture, and let them invest in that. Because with irrigated agriculture, the products can be consumed locally, and if they're of international standard, they can be flown to Europe. Because we had that experience before in the First Republic, when we were sending flowers to Europe, aubergines, etc., etc. That could be restored. But there has to be massive investment in agriculture, and irrigated agriculture. And it should be so organized that there is not only production, but also there is marketing, flying it out of the country and consuming it locally.
Gentlemen,
I think the future is there.
On that note, I would want to thank you for coming and gracing us on the Business and Economy program. It was a pleasure to have you, Mr. Adenewo and Mr. Jan.
Yes,
it's our pleasure, and I'm sure this is not the last time we're seeing you on this program. Thank you very much.
Thank you.
Thank you.